Hey kids, how are you? It is Wednesday, day 3 of our market simulation. In 1920s terms, it's 1926. What you see here in front of you is a bull and a bear. This is a concept I want to introduce to you all today. Is the concept of being bullish and being bearish. Now, in the 1920s, the economy was a very bullish economy. People they thought things were going to go really well. It was not going to go anywhere but up. The future was super bright. In the 1930s, it was the Great Depression. That was a bearish economy. People were really kind of bummed out about the future, and they thought things weren't going to go so well. Today, to 2020, April 29th here, in the middle of this coronavirus, people are probably more bearish today. They're a little bit skeptical about the future. However, in the 1920s, people were bullish. What I'm going to show you here is a quick video. All right. And so something that happens in 19 I'm sorry, there's something that happens in Pamplona, Spain every year is people run with the bulls. In the 1920s, investors were bullish. They were kind of running with this metaphorical bull. In Pamplona, for some reason, they do it for real. And so people run with the bulls, and a lot of them seem to be having a lot of fun, just like in the 20s, and they're running along happily. But eventually, and this happened in the 20s too, eventually the bull's going to get you. And here you see them running through the streets of Pamplona. Not too fun for the bulls either, you might add. But the people are running along, thinking they're having a good time. It's actually a major event every year as they run with the bulls. They're positive, they're energy, they're happy. But eventually, like I said, as you'll see here, the bull gets you. The narrator, I don't know if we're going to catch it. Listen. Dozens of people are gored or trampled. Over the last century, 15 Mozos have been killed at the event. Not so good for that guy there. All right, so it was good. The stock market was very good in the 20s. People were bullish. They thought it was going to go really, really well. All right, so let's back up a little bit and talk about what we're doing today. You're going to update your stocks for day 3. So I've updated this spreadsheet, which you have and is on the class website. Yesterday, you updated day 2, and today you're going to update day 3. So I'm just going to do an example here for you just to help you out. So let's say on Monday, I invested in the Kellogg's company. I invested in Kellogg's. I bought 50 shares of Kellogg's, and that calculates out to $2,000. Now, yesterday, so day 2, I went over to this sheet over here, day 2. I found Kellogg's, $144, and so I went back over here and I typed it in. Here we are. I typed in $44 right there, and I upped my value. My investment of $2,000 went up to $2,200. So you should have done that for all 2, 3, 4, 5 of your accounts. All right. Now today we're just using the pink boxes today. We're on day 3, just using pink boxes. So again, same spreadsheet on the right, the stock prices spreadsheet. We're going to find day 3, 1926. People are incredibly bullish. They're incredibly optimistic about the future, and the stock market shows it. As you'll see, if I find my Kellogg's here, Kellogg's goes up to $68.20. So I go back over here. I go to my cell, I type in 68.20, and it calculates out, and now my investment's worth $3,400, $3,400. I've gone from $2,000, what I invested in 1922, day 1. 1924, day 2, it was $2,200. And then today I've jacked it all the way up to $3,410. I took $2,000, and because the market is well, because Kellogg's is doing well, people think the cereal is going to be a lot of cereal is going to be bought in the future. And they're right. In the middle of the 1920s, America was in a very, very healthy spot. And so the optimism, they were bullish about the future. So people upped the value of Kellogg's to $68 for one share, which for me was $3,400, which is a lot of money. I turned $2,000 into $3,400, a $1,400 increase. Now, what you're going to do is you're going to update all 5. I'm going to hit pause here on this thing. I'm going to update mine. I'll be back in a second. Okay, I'm back. So I updated American Book, 42.63. Here's American Book 42.63. Wright Aeronautical, U.S. Steel, and Coca-Cola. And now the exciting thing is I took my initial investment from Monday, 1922. I had 99.75 invested. Today, I come over here. It's worth $16,304. I've added about $6,000 to my personal wealth. Thank you, Roaring Twenties. Thank you, bull market. All right, things are going very well. If I calculate this in my head, that's a 163% increase in my investment. 16,304 divided by 99.75 times 100. Thank you, Mr. Hanlon. All right, so that's what you're doing today first, is you're going to update your stock prices. The second thing we're going to do is we're going to take a look at the market report, and there's, just like yesterday, a few brief questions. So here what we're going to look at is, this is the day 3, 1926 market report. Again, working on this concept of bulls and bears. Are you bullish or are you bearish? Now, when things go well, when things are going really well, the future is bright. You're running with the bulls, things are good. All right, so if I look at the unemployment rate peaked in 1921, but now it keeps going down, down, down. And what does low unemployment mean? It means people are working. And so they're making money. So am I bullish or bearish about the future? If more and more people are working, do I think the future is going to be a future where the economy is great? I'd be bullish. Or do I think the future is going to be an economy that's bad, which is going to be bearish? I know what I'm going to pick. So just you're going to type in this box. You're going to type in bullish or bearish next to this picture. All right, if I scroll down a little bit here, if it lets me scroll down a little bit here. All right, the second market indicator is average weekly earnings. Saw its 5th straight session of growth. Weekly earnings go up, 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 up. Oh my goodness, people not only are working more, there's not only more people working, but they're making more money while they're working. That means people have more money in their pockets. Do you think the future then is going to be bullish? People are going to spend more money in the future, or bearish? People are going to pull back on spending. I think if I had more money, and again, don't tell my wife, if I had more money, I'd probably spend it. I think I heard her screaming from next door. All right, finally, we have here U.S. manufacturing. These are the plants. This is this thing called GDP. GDP, gross domestic product, what these factories are pumping out. And it continues to climb. 1920, it drops to 21, 22, 23, 24, 25, 26. It is going up, up, up. So do you think the future is bullish or bearish? Pick one. So people are making more money, more people are working, and the factories are cranking out products. All right, do you think that's going to be good for the future or bad? And then on the second page, you'll see, if you scroll down to the second page here, hey, that clicky thing. If you scroll on the second page, one more, then quick, you got to answer a question here. Car production continues to go up, but then typing in this box here, if you were a stock market analyst in 1926, would you be bullish or bearish? Not bearing, bearish. Would you be bullish or bearish? B-A-I-S-H. All right. So using information for the chart, so what you're going to say here, I would be bullish or bearish, but we're going to say I would be this, bearish or bullish, because manufacturing is going up and because people are making more money and more people are working, period. That's it. And then you're going to turn that in through the classroom. That is your deliverable today. All right, so if you want to go look up more information about the running of the bulls in Pamplona, Spain, go to the YouTuber and Google it up. Pamplona, Spain, running with the bulls. If you want to know more about a bull or a bear market, there's always research out there for you to do. But remember, a bull market is a good thing. Things are going well. As you can see on this guy, the market's going up, the market's going up. And a bear market's a bad market. The market's going down, going down. Now, a lot of you who went to New York City saw those bulls. All right, Wall Street loves the bull. See you guys.